Welcome everyone. Welcome to the trade findings and adjustments for Hurley Investments on April the 25th of 2024. We're going to start off today with our most recent trades we talked about, a simple covered call on Dominion or EIX. A lot's happened in 2 weeks, so let's take a quick look at let's look at a chart. Let's go to Dominion. Yes, we will be coming back to Meta as we talk about investing and how important it is to invest in a process. The simple answer for Dominion, we were just trying to get a 1.5% return. We were looking at Dominion 2 weeks ago, roughly at $48. There is no reason why you can't take Dominion off today. 2 weeks, you get about a 0.71% return. So great time. We talked about it bouncing off of the 50-day, putting a covered call. You'd make 1.1% on the covered call and another 0.5% on the movement of the stock. This is where, when we ran the calculations yesterday, you'd make roughly a 0.71% return in 2 weeks. So you're over a 0.5% return. It would be really smart to exit that trade. I did not do the EIX. I am not a fan of Edison International. Suck as a company out in California. So I do not have the pricing, but it looks about the same. I would imagine you would be closing the EIX covered call for at least 0.7% or higher. Now I kind of giggle, right? If you have, and I'm going to go ahead, I'm going to take a pen color here. Let's see what we have. If you close it out for a 0.7% return and you annualize that over a year, so you've got 26 weeks, and it's so stupid that they talk about this, but if you want to annualize your return, it's an 18.2%. In real life, it's 0.7% that you got in 2 weeks after management fees and commissions. So that's what it really is. I mean, it's a dollar and change kind of thing is what it is. But that was our trade. It worked excellently. It was a quick 2-week trade, depending on how much you put into it. If you did 500 shares, and again, I was not on the Edison International. I can't stand Edison International, but I did do Dominion. And to give a relatively short answer, it was like a $600 trade per, 100 shares. If you did 500 shares, you would have made $3,000 in 2 weeks. So that's how I'm choosing to look at it. Any questions on those two covered call strategy trades? All righty. The elephant in the room, and this is where you have to understand. We need to talk about investing as a process or event. You can put trading in here as well. Jeff, you're coming over from the safe option strategy, so you won't understand this next question, but my group will. Jim, Jacob, Lee, Mary, what did we do to Meta on Monday? Someone tell me, what did we do with Meta on Monday? I know you guys were there. What did we do on, there we go, sold it. On Meta on Monday, we sold around $481 and change. booking a 220% return on investment or more. Because we added the shares, it truly was closer to a 350% return. We sold it. Someone tell me, why did we sell Meta? Why did we sell Meta? There's a distinct reason. I was talking to you guys on, hey, it just calculates that now is the time to get out. Wasn't hard to understand. I didn't know Zuckerberg would be an idiot and go over every area that they are hemorrhaging billions of dollars. But I very distinctly gave a single reason why we sold out on Meta. Great job, Jeff. Anyone remember? There we go, Mary. Why did we? Might as well put that in there, right? It doesn't do any good if I don't have it in there. Why did we sell Meta? Because it was fully valued. It had full valuation. That's why we sold out on Meta. We went over how to calculate that at the beginning of the year. But Meta was so overvalued, even though they had an extra $50 billion to buy shares of stock, even though they were now being included on the S&P 500, it was fully valued, like ridiculously fully valued. Could you have made a stretch or case for why it was not and could have gone to 650? Of course you could, but it was a stretch. And the short answer comes down to your investing methodology has to be always taking a profit somewhere in your process. What that means, if you are going directional, you have no real, and I'm going to put this in quotes, real adjustments. You are just reacting and trading as an event. You either get it right or you don't. If you don't, you've got to get more right than you get wrong. But the odds are against you. The odds are completely against you because the stock can go up, down, or sideways. It can go up slightly. It can go down slightly. You've got about a 1 in 20% real chance of making money if you break it all down using a standard deviation methodology. If you are going directional, yes, you can add a long put to Meta today, but you're reacting. You don't have something that was already hedging your event on the downside. And that comes down to investing as a process. Hurley Investments currently has leap bull calls in place. And we're going to bring those up so that you guys can see the majority of the positions that you're in. I just snapped a picture of some of our majority of positions where we have the 520 600s. 520 600s. We have the 470 540s. This is today's real life. Are we down? Of course we are. $4,500, $466. But let's evaluate the positions. We're going to start with the top one. We have the right to buy Meta at 520. We're obligated to sell at 600. We can make the difference in the strike prices, $80 minus the cost of our trade. It doesn't expire till January 2025. We still have 9 more months to be in this trade roughly. Bought in at 82.29 on the high side, sold the cap at $50.29. We're into this trade $32.29. What we paid $82 is only worth $32.90 right now. What someone paid us $50 is only worth $15.95. Doing the math for today, on a stock that's going horribly wrong on our direction, bullish, our protection is making up basically $5,700 while we're losing $8,900. We have made up, in general, about 66% of the downside movement on a stock that's going the wrong way. On the 475.40s that we put on a month ago, spent $83, got $54 of credit. It's not as bad as we are, but what we spent $83 is only worth $69. What we spent $54 on is down, well, it's at 75, but it's down from where it was at. We're making almost $3,000 on losing $3,680. So here's the question. What is our next step? What is our next step for LEAP bull calls placed 2 months ago? This is your process, right? What's my process? What am I going to do in this trade? What would your thought process be? Because it's different for each one. Well, yes, it's kind of neat, right? We can take a pretty good profit. What we sold for $50, we can buy it back for $15.95. I will sell you something and you give me $50 all day long, when 2 months later I can give you back 16 basically. Pay me 50 to give you back 16 in 2 months. Love it. That's me collecting 70% roughly. I make a 70% return on you giving me $50 and I give you back 16 2 months later. 70% return there. Love it. It's interesting because we could take that $35 and you could also dollar cost average to lower your cost basis on the long side. This is the thought process as you're in the trade. This is the process and in the trade. What do I do if it goes up, down, or sideways? Well, we can lower our cost basis and dollar cost average using the profits on our hedge, which now means we're uncapped. We lowered our cost basis by about $25. And from now until January 25, if it gets up to that 520 or higher, we're making a ridiculous return. Let's look at the lower ones. Well, Kevin, down below, it's different. We paid 54. That's gone up to 75. What we paid 83 is gone down. It's gone down to 69. You are losing coming and going. So what's the adjustment? What's the trade? What are we going to do on this one? This one is out to June of 2025. So those of you that have taken education, Lee, I know you're one of them. Jeff, you're one of them. Jacob, you're one of them. What is your process? What's your adjustment on the bottom one? And I'm going to give you guys a second or two to answer because I don't want to give away the answer. What's your adjustment on that bottom one? Wait for the stock to get up near the short or the short to expire. Yeah, Lee, you nailed it. Perfect. There is no adjustment. The adjustment is you show patience. You wait. You wait. If we're still, because of volatility, way overvalued and overpriced on the short side at 540, you need time decay to eat away at that short position. On this one, you just sit back and wait. Your best adjustment is patience. And just to let you know, Meta was down over $84 today. It's only down $57.88 right now. Why is Meta coming back? They've got $80 billion to buy stock. I think Mark Zuckerberg is an idiot, right? Which is kind of funny because he's a billionaire that created a company. He got into Harvard. And so nobody like me is saying Mark Zuckerberg is an idiot. I know he's brilliant. He's brilliant. He's a billionaire. He made a company. I get it. But he should not have listed every place that he's hemorrhaging money. His experience in running a business and doing an earnings event is awful. It's substandard. He does not know what he's doing. And he listed every single place that they are hemorrhaging billions of dollars, yet they're still showing a profit and beating on the top and bottom line. Foolish. If he shut his mouth and just did what he said he was doing, they may have been up to $650. But he's trying to be a good person. He's trying to be human. And really, he's just an inexperienced idiot when it comes to earnings calls and just cost the company and shareholders like $200 billion of value in his company. We have things in place. We can literally buy into Meta again today, and we'd be doing it at, $50 cheaper than where we sold out. But we have things in place, and right now we're just going to let the dust settle. Trading as a process means you have a position, if it goes up, down, or sideways, that makes you some money. Trading in a process is you're not reactionary getting your butt handed to you. You have a methodology and a plan in place to continue to make money in your trade. An adjustment strategy. All an adjustment strategy is to create a portion of your trade that is always making money. And all you're doing is adjusting to make money back and forth until you can exit your trade for a profit or a break even. Before you put your investment trades on, before you decide what stock to get into, what strategy to get into, You have to look at it up, down, or sideways. I know one of you today went all in, and you let me know that with 100% certainty, Meta was going to $651, that I had screwed up at selling at $481, and your arrogance cost you today. On an $803,000 account, I understood earlier you were at around 570 grand. So your arrogance cost you 230 grand today. I bet you'd probably take back everything you told me on Monday. You cost yourself over 25% of your portfolio being over leveraged in a single position without having protection on. Somehow you thought, and you're a nobody too, just like me, you thought you had it all figured out, and you gave me the price of $651. You screwed up. You blew it. And you blew it big time. Because you traded as an event. It had to go your way to get it right. And how arrogant you must be, or full of yourself, to think you've got it all figured out. It was a $230,000 learning experience for you. And Jacob, you can learn from it, or you can keep making that same mistake. But I'm letting you know, if you ever give me and have that call that we had on Monday night again, I'm going to tear into you, because now you should know better. You've got to trade in a process, not an event. Do you guys have any questions for today? I hope this makes sense to you. Lee, Jeff, Jacob, I'm giving you a chance. Mary, this is more of an education today on what you can do and what you probably shouldn't do. Any questions you guys have for me? Lee, great answer. You got the adjustment for that bottom one exactly right. Patience. We're going to wait. We're going to wait. Yeah, you put that one and nailed that one exactly. Thank you, Jeff. I appreciate it. Okay, guys, we don't know if we're doing a trade findings and adjustments next Thursday, so look for an announcement. Both Keeve and I are probably traveling, which will make it hard, but I do look forward to seeing you guys on Monday. Jeff, you can always reach me at khurley@hurleyinvestments.com. If for whatever reason you are not registered for our Monday night's Hurley Investments Market View commentary, let's make sure you are registered and ready to go. Guys, have a great day. Appreciate you being with me here today. Jacob, I'm sorry if this sounds harsh to you. And I hope that this does not ruin a portfolio, does not ruin a relationship, and that you learn to learn. Well, you learn to learn from your mistakes. That's the best thing we can offer, right? Guys, take care. Have a great day. Look forward to seeing you and talking to you on Monday evening. Trade safely, and I will talk to you later. Bye-bye.